Good morning, America. Thank you for watching Taxes Made Easy. We're talking about the September deadline today. So on the 16th, Monday, is the deadline for estimated tax payments. So if you're not on top of this, and I've talked about this before, but I want to re-emphasize this deadline, that if you haven't made estimated tax payments, you need to follow up on it. And we're really going to be talking about the importance of staying on top of your taxes, not only for your future, but for your business planning and getting a good idea of what your business is actually costing. So we've got a lot of news to cover today as well, some larger economic news happening. And there was a debate, but I don't think much came out of the debate, to be honest. But we're going to talk about all of that today and then really hammer home on how to make sure you are caught up on your taxes so that you can breathe easy. So stay with us here at Taxes Made Easy. Welcome back, everybody. And it just got dark in here. So following up with the news for today, we've got a lot of things to cover. So we're just going to jump right in. First one is kind of just another emergency relief for Connecticut and New York. So again, severe flooding happened, and so the IRS is announcing relief for individuals and businesses. And now you have February 3rd to file some of the individual and business tax returns and make tax payments. So if you have an extension currently to October 15th, if you have business returns due, and also quarterly estimated tax payments normally due on Monday, we're going to be talking about that today. You get that relief. And so who is affected? Always has a list of counties here for those that are affected. Kind of weird that they don't. Here we go. Suffolk, New York County, and Fairfield, Litchfield, and New Haven counties in Connecticut. So if you're in those counties, you qualify for it. Again, if you ever have questions, just go to irs.gov, click on news, or you can click on this tax relief and disaster situation. So it gives you disaster relief by state to find out if you qualify and if your state falls under that relief. So again, new disaster relief announced 2 days ago on the 10th, and this is interesting. At first, I wasn't going to share it, mainly because it doesn't apply to most people. This is the Biden administration has been putting this together for quite a few years, and it's called CAMT. Basically, what it does is a corporate alternative minimum tax. Poses a 15% minimum tax on the adjusted financial statement income of large corporations. So what does large corporation mean? 1 billion or more in assets. So this is going to affect anybody with investments in large corporations like this, and it's trying to make sure that people raise more revenue, raise more taxes, and make sure that these large corporations are paying their taxes. Who does this hit more than anybody else? Shareholders, investments, 401ks, mutual funds. It just makes these large corporations less profitable. But interestingly enough, and I wasn't sharing this tab, so again, this is just the CAMT corporate alternative minimum tax. There were all kinds of news sources about this today, from the New York Times, from the Forbes, from the Wall Street Journal, and the New York Times. I chose to go with this one. Talks about this 15% tax expected to raise $250 billion over 10 years, which is $25 billion a year. It's funny when they talk about this huge numbers, $250 billion over 10 years. That's $25 billion a year. So the government sneezes that away every day. Not to say we don't need the taxes. We definitely need to do something about a huge budget. But the problem is if we don't stop the spending, it's kind of pointless. And interesting thing, it sounds pretty straightforward to just do a 15% tax, but from the Wall Street Journal, it mentioned that there's 603 pages to this guidance. So here they have one page, but if you click on the proposed regulations, it is not only so it's you can download the unpublished version, and it's massive. So it's a book on how to comply, and this is one of the things that the New York Times is complaining about, that there's still some loopholes. So it's by setting an alternative minimum tax, it means that people will pay this minimum amount regardless, but there are loopholes. Now, some of the loopholes that they complain about, kind of funny. So when Democrats create a new corporate tax regime, it's just to rein in the ability of large companies to pay little to no federal income tax. So they came out, it's hundreds of pages, actually 603 pages of proposed rules. So these are all proposed, haven't become official yet, but this is a big project that the Biden administration has been working on. And roughly applies to about 100 companies with more than 1 billion in profits. Now, when they say profits, this is my question: is how are they measuring this? How is this? Is this 1 billion in revenue? Because that would be a different term. When they talk about profits, that doesn't exactly make sense when applied, or when we look at some of the loopholes that they complain about. And this is something that they mention, is that what looks like a loophole to one is a reasonable economic incentive to another. Depends who wants it. Again, the Democrats are very good at giving their donors plenty of loopholes. Republicans do the same. I don't like it. I like the idea of creating a fairer, flatter system that everybody can anticipate and and understand, because a lot of these subsidies and loopholes, especially ones that are carved out for particular companies, favor the rich, favor the connected over mom and pops, and actually decrease competition. The latest one was kind of funny. With California's increase of minimum wage for fast food employers to $20 an hour, Gavin Newsom exempted places that prepare their own bread from this. So if you cook your bread in the store and serve it fresh, that was exempted. Why? His good friend owns Panera Breads, and someone that he's been friends with from high school, and so it was the media had a heyday with that, but again, it still happened, and it's kind of silly. So, it's not good government. So some of these loopholes that they're complaining about is they're saying that companies often report large profits to shareholders, but then they owe little no federal taxes because of deductions and credits that allow them to winnow that tax down. So to try to get rid of those, this requires at least a 15% of the adjusted profits they report to shareholders. So whatever they're reporting to shareholders for stock purposes, that's what they're claiming they have to pay. But there are still tax breaks. So tax credits, this is something that a lot of companies out there are purchasing right now. The federal government is putting them out there for people to buy. And I've had people ask me about it. It's not within my wheelhouse. Cost of business assets. So investing in equipment and factories, that's always been a write-off. And to depreciate those assets on accelerated rates is something that's been across the board. You get rid of that, you get rid of investment and equipment and factories, and that's something that we've always encouraged. So, and count losses against tax bills in the future years. So for so a company doesn't have a profit, they lose, 10 million, let's say, which is a small loss for a company that size, but let's say they lose 10 million. They don't stay in business by losing that money. They can only write off so much in a given year. And so, well, that's usually carried forward. So that way, even if they have a loss, they can write that off against future gains to even things out. So if a company over a 3-year period has a $10 million loss and then has 10 million in gains over the next 3 years, it's a wash. The net income is zero over those years. And that's the point of allowing business to write off losses against tax bills in future years. If you limit it to that 1 year, and then they have a 3 million gain, they had a $10 million loss that they're not getting credit for, and then a 3 million gain that they're getting taxed on. So these are very accepted practices in tax law and accounting. So I think it's interesting that New York is complaining about this, or the New York Times, but I guess they would just want people to pay taxes regardless. So is an alternative minimum tax a good idea? It's a payoff. Yes, the government gets more, 25 billion, but it's going to hurt the largest corporations out there. Not that I'm a fan of them, but it will help or hurt those investing, 401ks, IRAs, and people that are investing in the market, because those are some of the biggest stocks that people invest in. IBM, McDonald's, Nvidia, X, you name it. Those are the biggest companies, some of the biggest companies out there. Moving on. We can cover this article pretty quickly. This is a Southwest Airlines. Is just moving things around. They have a board shakeup, retirements going on, so expect to see some changes at Southwest Airlines. They still have the same CEO, they still have the same investor, but things have been turned upside down with airlines since COVID. So it's something that they're reacting to, and so they're pretty much cleaning out their board and moving to revitalize Southwest. So the need for thoughtful, deliberate changes, Southwest remains urgent. Believe the highly qualified nominees will be the right people to steady the board and chart a new course for the airline. So I think this could be a good thing. Stay tuned and expect some changes here at Southwest. And really, that's all I need to say about that. It is important for companies to shake things up, to be willing to move and change as the economy changes, and that's healthy. So the next article is on Bitcoin, and I think I'm just going to be able to introduce this article. So this is from CNBC. Really, in the long run, it's arguing that it won't matter who gets elected for Bitcoin, but we're going to dive into this when we come back. It talks a little bit about the short-term, long-term prospects of Bitcoin. Who knows if it's accurate, but we'll cover that when we get back. Welcome back, everybody. And I finished up saying, who knows what's really going to happen. What I should have said is, this is for smarter people than me to figure out. I am not an expert in what's going to happen with Bitcoin. Again, my goal here is just to educate people on what's happening with the economy and with our taxes. But I do think this is an interesting article. It has entered politics in that President Trump has come out as a big supporter of Bitcoin, whereas before he wasn't. So again, you could call this a flip-flop on President Trump. Why the change? Well, J.D. Vance is a huge supporter of Bitcoin. He sat down, he's met with people that are seriously invested in Bitcoin. Maybe he's learned. I don't know. I don't think it's fair to hammer politicians when they make an informed change and can explain it. But when it sounds like they're switching policy positions just for an election, yeah, that's when we should be extra cautious because it probably uh, might be selling us a line. So anyway, so this is despite the increasing partisan sentiment in the cryptocurrency industry, a lot of people are saying it won't matter who wins in the end. The way the economy is going, the global economy, crypto will probably become more and more popular, and part of that is due to what governments are doing. So a lot of people are expecting a wave of optimism if President Trump wins the election, and especially that's because he's come out as very pro crypto. I don't know. I've talked to financial advisors. Some of them said there's no way they'll ever offer it because it's not tied to anything. It's an investment. Just guessing that it will grow. It's not tied to any production. It's not tied to overall growth in the economy. So it is highly speculative in many ways. And I do think that it'll get up to six figures by 2025. They say almost certainly. But again, these are the people that are investing and promoting and stand a lot to gain if Bitcoin continues to increase. They say it's rooted in more in the fiscal monetary profile of countries, sovereigns, and the United States. So long term, they say neither candidate changes that. Maybe they're looking at the poor financial decisions in the world and saying we need something other than the dollar or other things to invest in. Kamala Harris and the Biden presidency have looked to limit the price of Bitcoin or drive it lower, or it fears that, the Harris presidency would limit the price. They have tried to regulate it more, but they've also done the EFTs for crypto. So it's been kind of a mixed bag. But the EFTs have really put the growth of crypto and people's ability to invest in crypto into overdrive. So, interesting comment here. The truth is that the market is robust, not centered on the IRS, and hasn't reacted negatively to major events from either side of the political spectrum. So there are plenty of people that argue that a president has limited power over the economy, which is true to many respects. When they come into office, they're inheriting the previous president's mistakes or achievements. But I do think that overall policy, and we have seen this, is affected by who's in the office and what kind of fiscal policies they take on. So it's more of a balanced approach. So they're arguing that a lot of people are overplaying the risk of a Harris presidency. So it'll be interesting to see how it performs and track it. Right now, it's trading between 55 and 70,000 for most of 2024. Reached a high of 73,000 in March, and we'll see what happens going through this. So again, there's all kinds of classes. If you Bitcoin has gotten very complex. If you do decide to invest in that area, I would highly recommend talking to someone and getting expert advice on how to do that, because it's something that I am not familiar with at all. So it's been very interesting to see how things have gone. But I'm going to move on from that. So going from Bitcoin to China, so these are some more complicated issues dealing with global issues. But I think this is something that's fairly straightforward. IBM and other companies are closing their operations in China. They're either reducing or altogether shutting down their operations in China. Why? It's like they're finally getting it. They say they finally get the message. China is not our friend. And I will say that let me clarify. Communist China is not our friend. The Communist government of China is absolutely not a friend to human rights. It's not a friend to free enterprise and freedom of markets. It's not a friend to companies that go and do business there for a host of reasons. So again, IBM again has joined a long list of American brands and that have closed some or all of its operations in China. So they were very businesslike when they told everybody, "You're fired." You channel Trump a little bit. I never watched the Apprentice. Anyway, it was funny. Why? And this is the real question here. The fact that it's happening is one thing, but why is it happening? Um, a lot of it is they're moving jobs not to the U.S. but to India. They're adding researchers and engineers in India, which does not have the communist government cracking down. It's still fairly friendly to it. And this is after 4 decades that IBM has been in business in China. So China was considered a major growth market and that they could do a lot of business there. But revenues have fallen for 2 years and business has slipped. So fallen revenues is part of it, but it's dealing with the communist government more than anything else. So they're claiming they're improving client service as the reason, but some of the more obvious reasons, staffing and costs in China have risen faster, much faster than India and Asia. Chinese competition, sponsored and led by the government. So they moved over there, they started producing goods cheaply and exporting them, which China was all for. But as far as their domestic market, China has copied, stolen all kinds of technology and used that against the people that they have partnerships with. So not a good partnership in the long run. And so Beijing even has a campaign to delete America. It's a Delete America campaign. Has ordered state agencies and state-owned firms, and if you don't do what the state wants you to do, it could extend well beyond that, to replace foreign-owned equipment with domestic products. So IBM goes over there, starts creating all kinds of computer products or whatever in China. Now China has copied that stuff and refusing to buy IBM products. Couldn't see that one coming. Also, you have a growing obsession with security. So you have plenty of state intrusions into Chinese operations of foreign firms. Again, and then Washington has increased scrutiny of American firms doing business in China, especially in AI, which is a very up-and-coming area. China has really done their best to attack American economy, attack American productivity, and again, there's been a long complaint that from American businesses over there that China's stolen and spied on them, which makes it a lot easier when they're in China, and that the communist government has control them. So just a few of the household names that have closed some or all of their Chinese operations: Black & Decker, Nike, Hasbro, LG Electronics, Sharp. Also, these have downgraded their Chinese operations: Apple, Dell, Hewlett-Packard, Intel, Google, Oracle, and Quanta Computer. And this is just a small group. 30 U.S. brand firms have made a complete or partial move away from China. Each gives its own reasons, but again, it's the same overall pressures. Overall, I think this is a positive move. Why do I think this is a positive move? And I, in my brilliance, have not been sharing this article the whole time. I think it's a very positive move in that, again, we shouldn't be doing business with the worst dictatorships in the world. China has had some economic freedoms announced, so just kind of scrolling down to the different brands that we're talking about. China has had increased freedoms economically, but they, on the other hand, their repression of human rights, freedom of speech, freedom of religion, etc., has been horrible. They're still running the largest concentration camps in the world with their Uyghur population that has faded from the public consciousness. Nobody talks about it anymore. And then again, they're spying and attacking the U.S. dollar globally is intentional. They're not our ally. They act like our enemy. And for U.S. companies to be doing business there and taking advantage of and participating in human rights abuses, I think is a very shameful thing. And I think it's a good thing that they're pulling out of China. I don't think it's over corporate ethics that they're pulling out of China. Um, but hopefully it comes from a sincere place. So a couple last articles. So this should be making sure sharing this one. CPI inflation. So inflation is still concerning. And so people were hoping the Fed would cut rates by half a percentage point, 0.5%. We don't know what they're going to do, but again, this was the inflation rate was going to be watched very quickly. People have been talking about it mainly because the employment market is not looking good. It's actually looking pretty bad right now, especially with the adjustments that have been made. And again, we had pretty anemic growth this last month in August as well. So the results have not been good for the last couple of years as far as the employment, and inflation is still, the CPI was pegged at 2.5%. It's down from 2.9%. It's the lowest since February of 2021, but it's still well above their target rate of 2%. And when you go to PCI, which is another measure that they've been looking at, that's at 3.2%. This strips out higher food and energy. So gas prices went down a modest 2.6%, which helped keep the CPI lower, but then the consumer price index. But then I think it's the PPI is another one that they've been watching that actually jumped to 3.2%. And this is matching what Wall Street had forecast at 3.2%. Still lower, but again, monthly reading was 3.3% higher than July's 0.2%. So still some concerning news when it comes to the inflation rate. It's still ongoing. It's still higher than about 1% higher than it should be. And so next week they're expecting that we'll get a 0.25% cut in the Fed rate, get a little bit of relief if you've been, that's a great time for people to consider refinancing their mortgage. If they got a mortgage in the high 7s or 8s, the mortgage rates are around 6.43 last time I saw, for good credit. And if you can shave off a percentage point or two on your interest rate, it should really help. So again, this is another quote. Investors are hoping for a bigger cut, but they're going to focus on the employment picture, which is, again, this is a very concerning side of what's going on in the economy. So again, playing with the rates and throwing cuts out there leads directly into our next article, Fed's balance sheet. And I'm talking about this a little more than I wanted to. And this gets really into the weeds based on their, what are they going to cut, 25, 50%? Who knows? It'll be decided next week. Most people are expecting that they will cut. I do feel that they will cut it. The labor information has been bad enough that they probably will ease a little bit on the Fed rate. However, the article talks about the balance sheet. How much do we actually have on our balance sheet? And this is all debt that the federal government has committed to. So again, back in 2004, 6, that wasn't that much until 2008 and 2009, our federal government decided to do quantitative easing, bailout, Bear Stearns, Lehman Brothers, other and here's Bear Stearns and Lehman. AIG Group was bailed out twice. This is the whole idea where you got the too big to fail concept, which I criticized at the time. I'm like, that's ridiculous. They're not going to learn the lesson. They're just going to repeat the same mistakes if they're not held accountable. Because who ends up paying the cost? American taxpayers and inflation in the future. So here you can see the big bailouts where this jumped, and to help the economy, they've done it consistently. It went down a little bit during the Trump administration. COVID jacked it right back up, and again, millions of US dollars. So this is in trillions of dollars here. So again, it well over, almost hit $9 trillion. Now it's down to 7.2, but these are all the different quantitative easing programs, and this is cumulative. So this is by year being added. So the total balance, it gets into it, is close to 55 trillion. The last it goes through the history, quantitative easing, 1, 2, 3. I mean, you can just show total assets being held. It's just shot up through, and going into COVID, it got even worse. So it exploded to almost $9 trillion with high inflation. So they did quantitative tightening to try to cut back on the money supply, and contracted by almost $2 trillion. But now we're expecting it to go up again. So again, this is the number of assets and debts that the federal government is carrying on their balance sheets is much, much higher than just the federal debt. Total liabilities are estimated to be around $55 trillion. And our future, that's all future taxes on the hook to pay for these huge programs, overspending by the federal government. And it's much larger than people are talking about. None of that was mentioned in the debate yesterday. And just a quick note on the presidential debate. I didn't watch it, but I never do. It's just a lot of mudslinging going back and forth. A lot of criticism of the debate itself, but I don't think a single substantive thing came out of the debate. I'm not seeing any major policy proposals. I'm not seeing any major clarifications of policy. Nothing like that came out of the debate. So it's who do you think performed better? But again, I'd rather focus on policy and substance. And we'll be right back after this break. Welcome back, everybody. And we're going to wrap up here talking about estimated tax payments. So it's one of those things people dread to hear, but it's due. And it's due September 16th, which is Monday. Now, if you're planning to pay online, you have to get your payment in at least 1 day prior. So I recommend Thursday, which is today, or Friday, which is tomorrow. So again, this is something I have talked about, I have mentioned about, and it's very important to get those estimated tax payments in. Why? Well, as we go through every single quarter, the further you get into the year, the harder it is to catch up for the whole year. So the IRS is going to, in November, they increase the penalty for failure to make estimated tax payments from 3% to 8%. That was November of 23. So this is going to be the first year that people are going to get hit with these massive penalties, even if they pay off their taxes by April 15th. You can pay everything off by the time you file your taxes and still get hit with the penalty, because the requirement is to pay as you go. They want to put self-employed people in the same position as W-2 earners, so they have their taxes taken out every paycheck. Self-employed people don't have to do it every paycheck or every month. They have to do it at least quarterly. So the next quarter, the last quarter, third quarter ended August 31st, and on the 16th is when the next payment is due. So it's going to be interesting to see what happens here with this penalty. I expect a lot of people to get hit with it that are going to be very surprised, and they're going to ask, how did this happen? What happened? So the best ways to deal with this is, one, talk to your bookkeeper, talk to your CPA, make sure you are reviewing a profit and loss. It doesn't have to be completely accurate, but you should be looking at your numbers consistently, at least monthly. And how does that help you? It helps you as a business owner, helps you see the trends in your business, what's happening, what's working, what's not working. And there are plenty of business coaches for your small to medium, even large businesses that will help you out there. If you need a business coach or interested, we can refer you to someone. So again, it's getting your financial house in order so you can focus on what you do best, whether it's growing flowers or running a flower business, or it's construction or plumbing, whatever it is, that's your expertise, and you want to, work in your flame, I guess. So instead of it's a metaphor for doing what you do best in your business, giving the tax and financial part of your business to someone else to take care of that and manage it for you. So getting a regular profit and loss not only helps you understand what's going on, but it also helps you pay your taxes, stay on top of them, and avoid all these penalties and interest. So there's so many different ways to do this. And if you are under withholding, you have to be aware, because the IRS is issuing lock-in letters more than ever. And I have a case right now where they're hiring. The IRS has issued them lock-in letters with no balances. They would just pay off their tax debt by the end of the year, but because they weren't holding throughout the year, the IRS wants to lock them in. And it's silly. It's when does that government get to sit there and tell people exactly how much they have to pay in taxes? But the IRS is being more aggressive than ever with this. So, first step, take a look at your numbers. If you don't have QuickBooks, or you don't have a CPA or bookkeeper that's on top of that, you need to either ask them to start doing so, and it might cost a little bit more. But here's the catch. If they do it throughout the year, it's going to be easy for them to do it come tax season, because it'll already be put together. And then you're not in the rush of everybody else dumping stacks upon stacks of receipts on a bookkeeper or on your CPA. So the better CPAs will encourage this. Actually, this will be a boon for them, because that creates a little bit of work throughout the year, helps create consistency throughout the year. And it allows you to take those numbers and help your business. So the worst thing you can do is wait until the extension for business is September 15th, which again, or this year's September 16th. So the deadline to file your businesses is also on Monday, your business returns. If you haven't gotten those in, you need to. But it's important to file those returns by the deadlines. You can have those postmarked by September 16th, or submit those electronically by September 16th, either way. And you should be able to look at those numbers regularly rather than waiting until the full year is completed. So what most businesses typically do is they wait until September 16th to get their business returns of the following year. That means your numbers are at least 9 months or 8 months old by the time you get your tax return prepared, if you wait till the extension. So that's 8 months that have gone by. How much changes in the business in 8 months? You don't have good numbers. You can't plan. And again, you can't really manage your business well if you don't know what the numbers are, if you don't know how to improve things. So again, I really am harping on this and hammering in on this, is that it is so important to stay on top of estimated tax payments. Again, one of the biggest services we provide to our clients is that we make sure that, one, we deal with the mess so that they can breathe easy moving forward, but two, we get them on a path moving forward where they're not going to owe the IRS in the future, that they're not going to owe state taxes in moving forward. And so, again, you need to be paying IRS and state taxes, estimated tax payments, to make sure you're on top of this. So what do you do if you don't have your stuff together? Well, first of all, file your business return. Put something in the next couple days by September 16th. Get that in, and the sooner the better. So once you get those numbers in and get something paid in, it's better than nothing. Then you can work with your CPA to develop a good system moving forward. There's QuickBooks, there's Intuit, there's plenty of programs that will even take directly from your bank account. And then you just have to organize it, make sure everything in your bank account is a business expense. And you have to make sure that things are categorized. But that's something a bookkeeper can do pretty easily. They just go through it, reconcile the statements monthly, and then you can look at your numbers anytime you want, like clockwork. So it makes a huge difference, enables you to run your business and to do it well. So I don't know how people run a business without knowing what their true costs are. And one of the biggest costs out there is taxes. That needs to be built into your budget. It needs to be planned for. And again, if you're not setting that money aside quarterly or monthly for that quarterly payment, it's going to hurt you every single time. Now, the IRS is increasing penalties. They're increasing scrutiny of businesses large and small. So if you're not on top of that, it's going to be a problem. And it's, again, a lot of this is free advice out there. If you listen to your advice, you will not have to hire us to clean up a nasty mess. And sometimes, a lot of times, life just happens. You can't foresee some things that happen. But staying on top of your taxes for ongoing businesses is it's so important to making sure your business is healthy and thriving. And that's what we love to see happen. That businesses are in a great place. If there are any issues, if you're not current on estimated tax payments or other corporate taxes, that's the number one thing that needs to happen, is that we have to give you current. We have to show that you're making those estimated tax payments on a regular basis. So it makes it so much easier to deal with the IRS when you're caught up on these estimated tax payments, when you're caught up on your filings. So when a problem resolves or arises, we can jump right into that rather than trying to get you caught up. And again, this goes to a big piece of advice I've given many times to help taxpayers, individuals and corporations. Number one thing, don't owe moving forward. If you owe moving forward, it's going to be a problem. They're not going to be able to resolve your case for you, and it's going to cause a lot of issues. Now, again, it seems like I'm hammering in on this issue and repeating this because it's important. And if you can't get caught up, so you vote for the first quarter, second quarter, third quarter, you have two options. If you just can't get caught up and you're struggling to make ends meet, you can do two things. Number one, just pay what you can and lessen the damage overall for this bill, for this tax year. And you know this tax bill is coming. Number two, get your house in order so this does not become an ongoing problem. And you do this a few ways. So number one is pay what you can, and with that, you have to get your house in order. So start budgeting, get a plan in place, work with a bookkeeper. It's hard to find good ones, I know. So we do refer bookkeepers and CPAs across the country that can do that work for you and take care of you. So If you have questions, you need someone to help you out, give us a call, 520-485-7371. We do have national network systems, and we do refer to people across the country. We do have relationships with certain CPAs in certain places like New York, California, um, throughout Arizona. And we've found and referred people in New Hampshire, Florida, Georgia, all over the place, all over the country. And if you have those questions or you're having those frustrations, give us a call. So option number one, pay what you can now, limit the damage. Number two, call us. We'll review your situation with you. Sometimes it might make sense to just hold off. Come January 1st for a new year, if you can't get caught up in this year, as long as the IRS isn't on your tail right now or coming after you, it might make sense to make sure January 1st you're filing everything, you're getting all your returns in, you're making all your payments come January 1st. And if you struggle to do it quarterly, do it monthly. It saves you whatever small amount of interest you would get. It doesn't justify the penalties that you'll get hit with if you're not paying an estimated tax payment. So in January, we're already in September. There's 3.5 months left in the year. If it's too much, it's overwhelming. Start January 1st. Get straight January 1st and start now with the plan to deal with your tax debts. And we do that a lot with tax clients. If it makes sense, we'll go over your rights and options. How can we address this? What can we do here? And let's look at resolving the case for you. So again, if you have any questions, give us a call at 520-485-7371. Or you can always find us at guardiantaxlaw.com. And all these videos are posted to our YouTube channel at guardiantaxlaw.com. So you can go through and rewatch and get some helpful tips and advice. And also, all the news sources are linked on our website as well, so you can go back. Oh, you mentioned this. You could always go back and access the original news sources that we quote and cite here. So, takeaway from this: deadline is coming up Monday. Get those payments in before Monday because it takes a full day for it to process and to show. If you pay on the 16th, it very well might not get processed in time. So avoid those late fees, get ahead on this, and get your financial house in order. And we absolutely can help you do that. We work with plenty of tax professionals, and when you have a tax team behind you, handling all this mess, so you can focus and work in your flame, work on what works best for you, what you're best at, it really frees business owners open it up. It allows people to really live life to their fullest and usually make a lot more money in the end. So again, a smart person delegates, understands what they're not good, and delegates out. Someone that might not be so wise tries to do it all themselves. I had one exchange that has always stuck with me. I had someone call me, and they were from the South, so very thick Southern accent. And he called me and said, look, I don't know what I'm doing. I don't have a clue about this stuff. He even said, I'm not a very smart man. So I figured I'd call you and get an expert involved. And I told him, that's one of the smartest things I've ever done. Or I've ever heard. I've gone and busted pipes in my own house trying to do a plumber's work and had to hire the professional, pay a lot more money to get it fixed, to fix my mistakes rather than fix what would have been a lot easier. We've all done it. And instead of hiring a professional to get this taken care of, it will save you money in most cases in the long run. It will give you that peace of mind to move forward. So again, pay attention. The deadline is Monday for your corporate returns and for your estimated tax payments for the third quarter. And then in less than a month, we have the extension deadline coming. So get ahead of it so that you can breathe easy and let us make your taxes easy.